Jared Dillian. Own your money. Own your life.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. So we learned today that Amazon is going to split its stock. We actually learned this from Charlie Gasparino at Fox Business. He tweeted it out today. I was actually watching when he tweeted it, and I pulled up a chart of Amazon and went straight up. Amazon's stock price is $3,300 a share. They need to split the stock. They need to split the stock. There are a number of reasons why a company would split its stock. Now, there's a whole bunch of people out there, these corporate finance geeks, they're like, why would you split a stock? It doesn't make any sense because, you get more shares, but the price gets cut in half, so why would you do that? It's the same thing. Yes, I understand it's the same thing. Let's talk about why you do that. So go back to the old days, and we used to trade in round lots of stock. So a round lot of stock is 100 shares. And less than 100 shares was frowned upon. Those were called odd lots. Because if you were trading odd lots, it meant you didn't have enough money for a round lot, and you were a piker. So the New York Stock Exchange used to keep this index of odd lot activity. And the idea was that as odd lot activity increased, it meant that more retail investors were piling into the market, which was a bearish sign. Nobody pays attention to that anymore because now not only do people not trade round lots, they don't even trade an entire share. They trade fractions of a share. So what a world we live in. Nuts. Anyway. There was a stigma associated with trading odd lots because it meant you were dumb retail. Now, sometime about 15 years ago, companies stopped splitting their stocks. When I was a kid, there were stock splits all the time. In fact, I have some AT&T stock, which used to be SBC stock, which used to be Southern New England Telephone stock. So I had it through a series of acquisitions. And I had stock splits pretty frequently. It happened all the time because companies tried to keep the price of their stock in a trading range, which was basically like $30 to $80. Because that was a level that a round lot would buy $3,000 to $8,000 worth of stock. So then about 15 years ago, they stopped doing that. And companies stopped splitting their stock, and stock prices started to go up. So I remember being at Lehman Brothers and talking to some program trading people, and this was back in like 2005 or something like that, and the average price of a stock was $30. Fast forward to today, and the average price of a stock is $130. Crazy. And of course, Amazon is $3,300 a share. Then you have the special case of Berkshire Hathaway. Berkshire Hathaway has never split its stock, and it's like $280,000 per share. Now, the interesting thing about that, I have traded Berkshire Hathaway stock. And let me tell you, it's not a picnic. It's very difficult to trade. And, the bid ask is like $800 wide. By the way, the specialist on the New York Stock Exchange for Berkshire Hathaway retired a very rich man. Okay. So what happens is that when stock prices go up, they become difficult to transact in, bid-offer spreads blow out, and it becomes just expensive to trade, which is happening to Amazon. If you look at the bid-ask of Amazon during the day, it's usually $2 or $3 wide, or about 70 to 100 basis points. That's an expensive stock. I mean, if Amazon was a $50 stock, it would be a penny wide, thousands of shares up. So it's no good if there's very high transactions costs in your stock. So that is one reason to split the stock, and now we're starting to see it. So the other reason to split the stock is it will make the stock go up. And you're like, why does it make the stock go up? That makes no sense because you do a 2-for-1 split, you get twice as many shares, the price gets cut in half, nothing changes, It's just an accounting fiction. Well, here's the thing to understand about stock splits. It's all about signaling. Signaling is very important. For example, you don't split your stock if you think it is going to go down, right? Because if you have an $80 stock and you do a 2-for-1 split and it goes to $40, and if the stock goes down 50%, then it goes to $20, and then it's below the trading range. So you only split the stock if you think the price of the stock is going up. So by splitting a stock, you're communicating to shareholders that you think it's going to keep going higher, and that's why the price goes up. So splitting is a sign of optimism. The company is telling you that it thinks the stock is going to go up, and you should listen. So conversely, they have these things called reverse splits. And a reverse split is when this is hard to explain, when a company decreases the shares outstanding and increases the price. And usually this happens when you have a stock that's trading $1 or $2 and it's about to become a penny stock. And what happens if you're on the New York Stock Exchange and you trade for 30 days below $1, you get delisted from the exchange. You don't want that to happen. So your stock is $1, so you do a 30-for-1 reverse split, and your stock goes to $30. Otherwise, your stock is going to be a single-digit midget. So when you reverse split your stock, it is because you think it is going to keep going down. So guess what happens on reverse splits? The stock goes down because it's signaling. They're telling you that the stock is going to go down. And that is stock splits in a nutshell. And it's amazing how few people understand this. It's all about signaling. People get it wrong all the time. I don't really have any good stock split stories, mostly because they all dried up. But they're starting to come back. Amazon is splitting. Tesla split. Apple split their stock. Google also needs to split their stock. If your stock is a couple $100 a share, then you should split the stock. In other news, my wife sent me a video of my cat Uma peeing in the sink today, and she doesn't even try to hide it. At least she would have the courtesy to flush. I'm Jared Dillian. This is The Jared Dillian Show.
Jared Dillian. Own your money. Own your life.